Everybody. All right, this is our two-part demonstration tonight. We're going to be doing the PowerPoint demonstrating the wedge formations and the breakouts, and then we'll go to the live charts. So that probably won't give us a lot of time to do any individual chart analysis, but I've got a lot of good ones for you to look at tonight. Let's see, Becky, we did change the password, right? Apparently. Yeah, my stochastics are 1233. Okay. All right, so tonight we're going to work on wedge breakouts. We did this not too long ago, but it's got, what's happening here? So what this does, okay, I got to do it this way. Wedge breakouts. So what we're really interested in is identifying the wedge breakouts so we can see where the breakouts actually occur. So what we're basically looking for is when the new investor sentiment comes into play. So we know that we can analyze just the price movements based upon candlestick sell signals, with stochastics in the overbought area, candlestick buy signals in the oversold area, and that kind of makes a fairly good reading for us as far as when to get in and when to get out with a high probability. And it also allows for exact timing for a trade entry. So what we can do is, based upon candlestick signals, we can see when there's been a dramatic change of investor sentiment in a trade. Now, the wedge formation allows us to visually analyze when that change of investor sentiment is about to occur. Wedge formation is very simple. It creates a support and resistance level, and the trading range starts to compress down to a point. So again, that support and resistance level is based upon being able to draw a line through the tops and through the bottoms. So if we're trading Netflix using candlestick analysis, we have a lot or major advantage by seeing where the investor sentiment's kind of stuck and where it might change. Notice in this case, came from here back down to here, came back up here, 2 points, came back down here, 2 points, came back up here, the third point, came down, but notice what we can identify happened this time that normally didn't happen. It didn't come down here. It did a bullish engulfing signal off the 50. That told us there was probably a new dynamic. Watch for the breakout. So again, this is not rocket science. This is just identifying when there's a compression going on and being able to use our candlestick analysis. I think you can even see the little buy signals down here. And the fact that they broke through this upper resistance level told us we had a new dynamic in the that price trend. So wedge formation is very simple to see. You got a resistance level and you've got a support level. And what we're looking for is which way are they going to take this price move. It can either break down or break up out of that formation. So that compression of the trading range is what kind of alerts us to a different type of setups, like a declining wedge. Obviously, is when the trend is moving down and it's kind of compressing to the downside. An uptrending wedge, obviously, is the opposite direction. But that doesn't have anything major to do as far as which direction your price is going to move after a wedge. Because we can see which way very clearly that this compression, which way they broke it. Not this way, that way. So when we see this signal right here, and we've seen there's been a wedge formation, we know we've probably got a fairly strong price move to the downside. This is what alerts us, the compression up here. So because we can visually see patterns, we've got expectations based upon the visual analysis of what's going on in those patterns. But if we see something like this, where they've come down, they've come back up, and are starting back down, that might be an inclination that a wedge pattern is starting to set up. So what's that tell us about trading in here? Probably don't want to be, yes, Rick, this is being recorded. We probably don't want to be trading in here, but what we do want to watch is to see which way they break out of this area. Because what's this area pretty much telling us? Whoops, where did that go? It's telling you there's this compression. Now, here's one where we can see pretty much how it's hovering right here at the moving averages and broke out. But we can also see what's happening at this level. Indecision. Now remember, whether you want to break it down to one individual candlestick signal, like a doji, what's a doji illustrate? That there's indecision between the bulls and the bears. So anytime we know there's indecision taking place, we want to see which way that decision is eventually going to be moved. So I'm watching here to see if they're going to break out through this level. I'm watching here to see that if their buying starts up, that I've got a wedge setting up. I can draw a straight line through here and see that they failed here. I can draw a line up through here, see that they failed here. I can draw a line right down through here. Whoops, this time, notice what we had, a little doji sandwich to tell us that there's now a change of investor sentiment at that resistance level. Okay. So this allows the candlestick investor to be prepared with much more, entry strategy accuracy and getting in at the optimal times. So we're not trying to anticipate what's happening. And this is one of the reasons, the reason we're showing these different signals and patterns is a lot of people say, well, shoot, when you've got so many charts that look good, how do you decide which ones to take? And then I get concerned about what to do with it. Well, what we're trying to do is kind of have everybody narrow their analysis down to maybe 4 or 5 different signals and patterns that you become an expert at. And I can pretty much guarantee you that if you decide on 4 or 5 candlestick signals and patterns out of the 12 major signals, the 6 patterns, and the 14 combinations, that if you are, acquainted with them all, that you recognize them, you don't necessarily have to become an expert at each one. But if you become an expert at 4 different, top-ranked patterns, and you're aware of all the other signals and patterns, for example, if you're trading wedge breakouts and you understand that a doji sandwich illustrates, or what it illustrates, when you add those factors together, you're putting yourself in a situation where the probabilities of being in the right trade at the right time are greatly in your favor. So what we're trying to do is put you in situations where the obvious entry points allow you to make a decision. There you go, Ken. Yep. So you don't have to know every price move. You don't have to know every pattern. concentrate on a few because you can see kind of how this wedge was setting up. We could also see how it would be tough to trade until it broke the wedge. Kind of a wedge pattern here, also coming up off the T-line. So if we can see there's a wedge, and it gapped way up, if you were like me back in the days before candlesticks came along, my first inclination was, man, I don't want to chase after this. This has already moved too far. Or the other, kind of bad rationale, oh man, I'm going to wait for it to pull back so I can get in, and as soon as I get in, it's going to go right back up again. Now we can say, all right, I see a wedge, I see a doji, I see a gap up, my best friend. I've got a best friend gap up out of a wedge. I'm not afraid to be buying right up here because I know the prospects are that there's going to be more upside. So if you're in a wedge formation, come on, read too far ahead. All right. Let's say you see the little kicker type signal and you decide you're going to buy NVIDIA, and you can see the wedge formation setting up. So what do you do here? Well, we had a doji shooting star. If it opened lower the next day, what would that imply? The top of that wedge was acting as resistance. When it gapped up, you stay in it. And or, if you're watching this, and you're watching to see what's happening at this level, you don't have to be hesitant about going after a trade. Again, what's our first criteria when we're doing the signals? We're looking for signals when we're in here in the oversold area. Hold on for. So what we want to be able to do is identify if we're already in an remember, that's what I was saying. We're down here where we see candlestick buy signals. We want to see candlestick buy signals in the oversold area. We want to see a pattern breakout where our stochastics may not necessarily be in the oversold area. So what are we buying here? We're buying the fact that we can see when there's been a change of investor sentiment based upon a change of investor sentiment breaking out of a pattern. So if you're in a wedge formation, what do you want? What to do? You don't do anything. If you see that you're in a wedge formation, you come out of it, and then once you identify that that's trading as a wedge, you probably don't want to trade this. But if you don't want to take it off your screen or off your watch list, you're waiting for the time to really get in or out of that position. If you're trying to analyze what the overall market is doing, this would have been pretty tough trading in the Dow with this type of move. But what were all the implications when it was back here? Notice what happened. Off the bottom of this wedge support, off the 50-day moving average, we have a spinning top doji and a gap up through the T-line and through the top of the wedge. That kind of eliminates that hesitation to say, man, I don't want to buy. There's too much buying. That's the instigation, I guess that's the right word, instigation to get in as fast as possible. How about a double bottom in wedge? Mike, it doesn't really matter. What you're looking for is the buy signals, candlestick buy signals, and the breach of whatever formation you're looking at. So whether it does a double bottom, whether it hits the bottom of this support level 15 times, as long as you can see there's a compression going on. I'll look at that. We've got a couple of wedges to look at. I'll look at that when we get to the live charts. Okay, so the whole point of this analysis is not identifying strictly the patterns like a wedge. It's knowing what to do based upon, that's all right, James. Knowing what to do once you identify that pattern and see what type of pattern or what type of signal we have when it breaks out. When it breaches, do we need next day confirmation? Not necessarily. That is the confirmation. So if I happen to be watching this, and and here's one other little factor, and this is part of your candlestick education. Look how this wedge was coming together. And what was right at the very end of this, the point of this wedge? A doji, yes. And what's your ultimate indecision trading? A doji. And what's our simple rule of a doji? Prices are usually going to move in the direction of how they open after a doji. So if I'm watching this and they say, all right, I got a wedge formation setting up, and then I look at it at 9:45 and it's trading up here, what can I pretty much assume? They've broken out of this wedge. I can be buying. The next day, yeah, that's part of this uptrend at that point. So I'm buying on the day that I see the breakout. So again, wedge formation is very simple to identify. Support and resistance and the compression. So what we have with a candlestick analysis is that we can see what type of strength or weakness is happening at the point of that wedge. I don't know why I lose some of the charts here. So visual candlestick. So if I see something like this, remember all the things that we can add to our analysis. Sideways move right back to the 50. You can kind of see you have a wedge formation. Now we have a bullish harami and a gap up. Where are we? We're up here in the overbought area. What's our hesitancy? Because we're in an overbought area as far as stochastics are concerned. Except if we can identify that we're breaking out of a pattern, usually a pattern breakout is going to occur when your stochastics are in the overbought area. How often do you hit a false breakout from a wedge, and how do you know if you run into one? Very easy, based upon the candlestick signal. If I was buying right here because I saw the wedge breakout and it closed back down here, kind of creating a dark candle, what's that tell me right away about my wedge breakout? It didn't break out. Now, why are we looking at this in the first place? Because the probabilities are pretty strong that if you see a wedge breakout, you're going to have a strong price move. So does that mean 100% of your breakouts are going to be strong? Definitely not. But the vast majority of them, I mean, that's the whole reason we're looking at wedge breakouts in the first place, is because we know what the results are based upon a wedge breakout. And we can identify it much more quickly based upon what type of signal. If I see a bullish harami gap up, that by itself, even if this wasn't a wedge, that in itself would be a strong buy signal. The fact that we can identify the wedge makes it that much more compelling. So when do I want to be buying? As soon as I see that my little wedge that I've been watching is breaking out to the upside. Now, do you always get big price moves like this on a wedge breakout? Definitely not. But I always use the reoccurring statement is, do you always get big price moves like this? Definitely not. But the probabilities, when you're using candlestick signals and identifying what's going on in investor sentiment, it puts you into these situations with a much greater degree of probability. Does not matter the time frame. all you have to do is visually see. This could be a 5-minute chart, a 15-minute chart, an hourly chart, or a monthly chart. Yes. And I always go back to the definition of a candlestick signal. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So that makes it very clear that it works on a 1-minute chart as well as a monthly chart. It's the same investor sentiment. So we were watching this one just recently. We had this on the watch list, and it broke in this direction. So that's our wedge breakouts. Now, the reason we're showing the breakouts is I think on November 17th, we're going to do another full day. Who's drawing the candles? Who was drawing the candles? Who was drawing the candles? Cindy, you got me there. We're going to, on November 17th, which I imagine is a Saturday, we're going to be doing the breakouts. And we're going to be looking at a bunch of them. The candlestick breakouts allow us, based upon whether it's a kicker signal, to identify which ones you want to go after the quickest. Kicker signal. And so I show this one because this kind of gets people around that, Cindy, the candles are on your charting service. If you're setting up your charts on whatever charting service you're using, I didn't understand the question. Thank you, Jim. That you can change your charts to either bar chart, line chart, or candlestick chart. And it produces the candles for you. So as soon as I see something gap up and start trading positive, I can already see that's a green chart. Now what this does is when we recognize which signals are the strongest of all the signals, like a kicker signal, this alleviates that hesitation where you're sitting there saying, darn, I don't want to buy a stock that's up 5, 10, 15, 30, 40, 80%. If you recognize the pattern or the signal, you know there's a lot more upside. Oh, man. I've got more phone calls tonight than I normally do, and it's not even Halloween. Same scenario here. Notice how you had a support level. In this case, you could draw a support, and you could see the T-line was acting as support. Then you had a bearish kicker signal. What did that tell you about the support? Number one, the support level wasn't working, and number two, what's one of your strongest candlestick reversal signals? The kicker signal. Becomes very easy at that point. How long do you stay short? And I say that rhetorically because we stayed short until we saw it hit the 200 in the oversold condition. Then what do we watch for? Well, there was our bullish Harami Doji. That's where we started to cover. Yeah, notice how Halloween and Election Day is so close. When I get down here, I'll tell you my Halloween story. So anyways, perfect time to short. Perfect time to cover your short position. So this is not because we're any great analysts. All we're doing is seeing what the Japanese rice traders have shown us are what happens in human nature time after time. We recommended this one. Can't remember, was it today? No, it must have been the last couple of days. Here's two elements of getting in a position at the right time. First of all, look at the series of dojis that occurred right smack dab on the 50 and the T-line, basically creating a fry pan bottom. What did this tell us right here about their series or stage of indecision? They told us which way they were going. 2 days ago, all right. Then it opened positive and did a doji. So we already know what a doji sandwich is. We already know what the doji rule is. If it opened positive, what was our expectations today? That this candle right here is going to probably be the same magnitude as this candle right here. All right, that's one assumption that works with a high degree of probabilities. Next high degree of probability, if we see a fry pan bottom and it gets to the breakout level, we've got a lot more upside. So we're looking at this breakout level. This became a good entry point. This became an alert. Even if you were a day trader and it started trading positive, you knew you could be day trading this on a high probability, high profit trade situation. Now we're looking to see what happens right here as this pattern started. If it goes up through here, now it's our next assumption. Then we've got a fry pan bottom breakout. There's probably our next likely target. And then you see what happens at that level. So all this identification of a pattern and knowing what specific signals are doing and what the results are, we know that the results of a doji sandwich is more upside. So that gives us a high probability of breaking through this level, and if it breaks through this level, gives us more probability that we're going to be in a good, strong price move. This is what we've been seeing here over the last couple of days. Notice the bullish Harami and Nvidia in the oversold area. The Stochastic's coming up. They did a doji gap up. Notice where the doji gap up occurred, right smack dab on the T-line. And what was our easy entry point today? Well, when we woke up and saw the pre-market futures were opening up pretty strong, if Nvidia opened positive, we knew it was probably going to trade positive because of the doji rule and because of the doji sandwich result. So the expectation is it's still heading higher. There's a wee little gap right there to fill. Then you got these moves. Well, for crying out loud, So this allows for identifying Winnebago. We shorted Winnebago because of this big bearish belt hold. Got down here. Now we have a bullish engulfing signal. It's a good time to cover the short position. Then you had your doji sandwich right here. Where's your next likely target? Back up here. Why? Because the probabilities say this is where the buying started, and you were right here at the bottom of this support level. So, again, this is all just kind of logic built into candlestick signals and patterns. Here's our bobble breakout. Look how glue started up, pulled right back to the T-line, did a doji here, opened positive. After hours, it was trading here. If you took out this little, or took out the 50-day moving average, which was acting as the resistance level, you still have a J-hook pattern. It just happens to be much more defined. So this is the type of thing we're going to be illustrating to people. Now, there is probably 15 good trade patterns that you can learn. But what we do on these weekends, on these breakout weekends, we try to show people all of them, but there's going to be some that you identify much more quickly or better for your trading, and you just kind of concentrate on those. I mean, concentrate is, all right, if you understand this is wave 1, you can pretty much figure out how far wave 3 is going to go. Yes. And that was the one thing, Brian, that kind of kept coming back to me as I was learning candlesticks. Because every time I identified a pattern or a signal and listened or read the explanation that the Japanese rice traders told about the psychology that created that signal or pattern, my first thought was, that makes sense. and the more I learned it, the more sense it made. So, made a lot of sense to me because when I started out, even as a stockbroker or quit being a stockbroker, I was the worst investor in the world. And now, just identifying the patterns allows me to take money out of the markets consistently. So we're going to be working on wedge breakouts. So this is the weekend. We usually advertise them as 4-hour sessions, but we haven't been able to eliminate them or get them less than 6 hours. But what you're going to get is a whole day session of identifying which patterns break out with the highest degree of probability and see which signals are created to create that breakout. So when you do that combination, now you're pretty much you're trading based upon what's the probability they're telling you versus what your emotions are telling you. Becky, do you have the link for the weekend? Let me see if I have the link for the weekend. Oh, there it is. Okay. Thank you. So, now, I always tell people, do what you want to do, but the feedback we get from these sessions, quite a bit. I mean, these are people that are emailing me afterwards and saying, shoot, the light really came on when now looking at a fry pan bottom breakout, or, man, I really like the J-hook breakout. So once you start concentrating on a few of them, you don't have to be an expert at all the other ones, because you always kind of profess that you're going to have more trade setups than you're ever going to be able to handle. So at that point, all you're going to have to do is kind of cultivate which ones out of the ones that you want, that you know well, are the best ones to get into. Okay, Jim, I'm going to turn off the projector for a second, and I will bring over, and we try to supposedly end at 1 or 1:30, but it usually goes to 3 o'clock, sometimes 4 o'clock. That's right. The best ones are the ones that earn you the best profits. So notice what didn't happen the other day in the Dow. That's not a signal. Now, the reason I point this out is a lot of people say, well, shoot, if it closed here, it would have been a signal. And it closed up here even stronger. Why is that not a reversal signal? Because there's one just logical explanation that the Japanese rice traders probably have looked at hundreds of thousands, if not millions, of chart patterns. And if this was something relevant, they would have told us this was a such and such pattern. So it's not one of the 12 major, or it's not a candlestick reversal signal. So that tells me right away that this probably doesn't have the same significance as a true candlestick signal. Otherwise, they would tell us what the significance of it is. Now, that was a little bit worrisome. But then we had kind of a doji shooting star and a bullish confirmation today, kind of giving you a doji sandwich. That now becomes a more, more confirming that the bulls have taken control. No, it's not even a Western inside day. An inside day closes below where it, this. Now, some people, we were having discussions of this a few months ago, somebody saying, oh, that's a one white soldier, which was something new that I'd never heard of. A bull sash, all right. All it tells me is there's the prospects of heading up, but not with the same magnitude or the same probabilities of a a reversal signal. So what I look for is, if this wasn't a signal, or if this didn't develop into a signal, that if it was an uptrend and it hit the first resistance level, that's where you start watching for the first buying. Have you personally found such a pattern less reliable? Have you personally found such a pattern less reliable? Oh, on this one? Yes. That through the years, I've discovered if this wasn't a signal, that this uptrend wouldn't have the same probabilities as if this had been either a bullish engulfing signal or a bullish Ferrami. It's not a tweezer bottom. Remember, a tweezer bottom would have had this low and this low exactly the same. It would look like a tweezer. So now, the fact that we did kind of a bullish doji sandwich kind of offsets this not being a complete signal. So that implies there's some more upside, but I'd still be very cautious if it came up to some resistance levels. Dan, I would expect it to move higher, yes, but it might not move higher immediately because, as we have seen, I'll skip ahead here, Apple beat their earnings. They were up a little bit in revenue, but they're trading down here right now. So that's going to kind of put a damper on the market. Now, when I say damper on the market, that might mean that instead of this moving positive again tomorrow, maybe they trade it down here and it takes another couple of days for the markets to move back up. But there's one simple rule using the T-line. As long as we're trading above the T-line, we have to assume the uptrend is in progress. I'm going to go through the biggies first. Then I'll go through the ones that we've been recommending. For you folks that are fairly new to these sessions, yeah, I think I'm not even sure if an Apple doesn't have a pull on the Qs as well as the Dow. But we've been able to identify which ones. No, I'm going to go through the Labu first. And I'll get rid of whatever those are. But we can see what's happened here right now. Bunch of indecisive trading. And now a bullish candle coming back up above the T-line. That's kind of telling us we've had a bottoming action in Labu. Now, if you're not trading Labu, at least it gives you the inclination to go look at some of the biotechs. Same scenario on the gold stocks. You can see what happened to Nugget. Inverted hammer, doji, spinning top, doji. Now a bullish candle. And where did this all occur? Right smack dab on the 50. So even if you didn't know a bunch of signals, a bunch of patterns, if you just took the very simple logic that if you see a candlestick buy signal in the oversold area, the Japanese rice traders say the probabilities are pretty strong. You're not going to be in an uptrend. Tesla. Ever since our big, huge morning star signal, another little facet of candlestick analysis is the Japanese rice traders say if the bigger the signal, the more compelling there's been a change of investor sentiment. Now, I say more compelling because look what Tesla's been doing over the last few weeks when the market over the last few weeks was going the opposite direction. So the benefit we see with the visuals of candlestick analysis is seeing exactly what's going on in that investor sentiment, because if you go back to the definition of a candlestick signal, which is the accumulative knowledge of everybody buying and selling during a specific time frame, if they're buying and the market's heading down, they're buying with the knowledge that the market is heading down. So there's something different in the dynamics of a stock going up or a stock price itself. So that's why I always say use the market as your kind of your general analysis. Obviously, if the market's going down, the most of your positions are probably going to be oriented towards the short side. If the market's going up, most of your positions are probably going to be oriented toward the upside. But that does not mean that you're not going to see some good sell signals, sell or short positions in an up market, and some good buy signals in a down market. Is now a good time to do a spread on NVIDIA? You could. I would anticipate that over the next few weeks, you're probably coming back up at least to the 200-day moving average. So that's the other thing we've got going on, what we're going to call the ladder, option ladder training, is if we're looking at something like this, what are the different options we have for option trades? They might be a spread right here if you're conservative. It might be a spread up here if you're more aggressive. So let's say you had a very good day today, but tomorrow's futures show the market will likely head down again. Would you place a tight stop to preserve your profit or let it run down waiting for it to come back up later in the day or the following day? John, that's up to each individual trader. If you're a slower holder, meaning a longer term holder, you might hold on as long as things don't close below the T line. If you're more of a quick trader, you might close it out and say, yep, let me see if it backs off for the day and I can always buy back in. Now, that statement right there is what has made me a ton of money, is I can always buy back in. So before candlesticks came along and I closed out a position, which back then I didn't have very many profitable positions, and then it turned around and went back up, my first thought was, oops, they are not going to trick me and get me back in and then take it back down and take some of my profits. Well, that's because we all think that they are out to get us. When you use candlestick analysis, you've got a much more rational decision making based upon knowing what investor sentiment is doing. Why is the market maybe going to be heading down tomorrow? Because Apple, even though they came out with good earnings, are trading down here, I think, right now. So that's going to pull the market down some. You don't know where Apple is right now. It's trading back down about 207. So that's probably going to pull, that's a rotten Apple. How do you mostly trade now or also? SB, I'm a swing trader. You trade based upon the time factor that you have. Now, I'd love to day trade, but I don't have enough time to sit here and day trade. So my trades usually last anywhere from 2 to 10 trading days. Yeah, trading at 207. So it's trading down here, which means, now, that is right now. You don't do anything, it doesn't mean anything. For all we know, tomorrow when we wake up, they can be trading it up here. So what they're doing right now doesn't mean a hill of beans, because investor sentiment in 12 hours from now might be completely different than what it is right now. Amazon, nothing major here yet, but they did close above the T line. They failed at the 200. So you still need to see a bullish signal. Really, we haven't had a bullish signal, just bullish trading. So when you have no signal, that's when you start watching to be a little bit more diligent as to see what type of trading happens at the first major resistance levels. I think I did all the biggies. Okay, so here are the ones that we've been in and why. This is your best friend signal, doji gap up. And notice where the doji gap up occurred, up through the T-line, and it broke this resistance level, stochastics in the oversold area. Futures are flat. Let's take a look. You're right. The Dow futures are up 3, and the Qs, the Qs are down a couple points. But it looks like the YM is starting to trade slightly positive. Where do you find a hill of beans? Well, usually when I step on the darn cat food in the kitchen, with my bare feet. No, this is not 3 white soldiers. 3 white soldiers has a bullish candle. The next day they open it somewhere in that bullish candle and trade positive. The next day they open it in the middle of that, or in the candle and trade positive. This is just strong gapping up. Yep. Thank you, Marshall. Okay. What was I doing? So chem, again, this is what tells us there's strong force. This is what tells us there's strong force. So let's make this a little bit smaller. So, as you can see, that first best friend gap up broke this downtrend. Where was the next likely target? Up to the 50. Well, went right through the 50. Where's the next target? 200. Went through the 200. Where's the next likely target? It might be back up. So we're back up to the highs that occurred a while ago. But what started this trade? The best friend signal. We recommended YGYI today. Because look where your bullish harami occurred. Right smack dab on the 50. So you've got this big price move coming out of a fry pan bottom. They pulled it all the way back to here. And now the buying has started again. So this puts you in a high probability trade setup. Where's the next likely target? Well, if they took it all the way back up here, you pretty much have 100% profit on that trade. If they took it up into here, you have an 80% profit. So how long do you hold this? Until you see a sell signal. Now, if you get up here and see a sell signal, and it starts backing off, you take your profits, what could be setting up? Well, possibly a wedge formation. So when do you buy? You buy when the candlestick signals tell you to buy. You sell when the candlestick signals tell you it's time to sell. Here's kind of a little doji sandwich on advanced micro. And why is this relevant? Look where they started the buying, right smack dab off the 200. Where's your first likely target? Fill in the gap. If it keeps going, where's your next target? Yep. We recommended NIHD the other day. I'm going to make this smaller. Because of the fry pan bottom setup. And so what's our simple rule of a fry pan bottom? Notice our little morning star signal right here on the T-line. Even though it's not in the oversold area, it's pretty much telling you that there's a buy signal right here. And what do we have for our criteria for a fry pan bottom? As long as it stays above the T-line, you stay long. Where's our breakout? If it breaks out through here, got the possibility of another breakout. Do you wait for confirmation after above the T line? Well, yeah, that was kind of what we were expecting today, that it would trade up above the T-line based upon the bullish Harami, bullish confirmation off the 50. So now we have at least a high probability trade setup. So if you went long, or if you're thinking of going long, now you've got a very simple criteria. If it opens positive, you don't want to see it close back below the T-line. Breakouts are defined above candlestick bodies or the shadows. It usually doesn't mean anything on the individual signals. We're looking for breakouts of the patterns. Why did WTW reverse today? On daily, it was bullish chart. Why did WTW reverse today? I don't think it did reverse, did it? Am I missing something? It did a kind of a doji sandwich today. Oh, after hours, is it down? Might have come out with earnings or something. Earnings, all right. Right, but I meant on the fry pan bottom breakout that you were talking about and drawing on the chart. Oh, Bruce, what were you talking about? Breakouts are defined above the candle. Oh, which one was it? That's just great. Oh, NIHT. No, it doesn't matter. It doesn't matter whether it's here or here. You're just kind of looking for the breakout of this area. So if you want to get specific, it could be there. But remember what our fry pan bottom is implying, that we should be breaking out to the upside. Whether it's this level or this level, it doesn't really matter. We just want to get through this area. Do you use candlestick signals during earnings, or do you change your operating basis in any way during earnings? The very simple rule of candlestick analysis is that it's the graphic depiction of everybody buying and selling during a specific time frame. It's the accumulative knowledge of everybody buying and selling. So our analysis on STX is that tomorrow morning they're coming out with earnings, and they were buying going into the close today. That tells me the probabilities are the people that are trading STX that know a heck of a lot more than we do were buying, so they probably know something more than the average person out there. So if they're buying going into earnings, the probabilities are that somebody's expecting something pretty strong. Now, are there surprises? There's always surprises. That's why they call them surprises. But I would say for every time you get a bad surprise going into earnings, you probably get 3 or 4 very good surprises. Oh. When did we recommend this one? I think today. NKTR. Look at the slow little rounding bottom. This is the setup for a what we call a column reversal. Big down day. Now they're coming right back up to the beginning. It's not unusual to see them take it right back up again. And that becomes your column reversal starting your uptrend. It's called a column reversal because it looks like 2 columns. And here's another one that we recommended not too long ago, ResMed, because of the doji gap up, your best friend. PTI, oops, let's get rid of these, also had a big, huge move. Came way up here, then opened down here. When we do our probabilities, or our percentage probabilities, if you see a big, huge move like this, if they open it lower the next day, you close it out immediately. If there's something good going on, the probabilities will tell you that they'll trade a positive. If they open it lower, you probably got a 90% probability that it's not going higher just yet. Now, look where they brought this back to. Right smack dab to the T-line with a left-right combo. Kind of at this breakout level. So this becomes an attractive chart in the sense that something stimulated a lot of buying. Then there's profit taking. Now the profit taking is over. Whatever stimulated a lot of buying is probably coming back. Now, is this a certainly is. But if you're buying here and it comes back up here, you're in the stage of making a 80-85% upside potential. WNC. When was the earnings? Apparently something's happened good because it came out of this little fry pan bottom slow curve with a, looks like a bullish flutter kicker, which is a very strong. It's like a thin green line is the 3T line. Works more effectively the further away. One of these right here. And that day was earnings. The 3T line, the further away you move from the T line, the more effective the 3T line. All right, so what was the signal? Well, if this was the day before earnings and they were still buying, I told you the prospect. So this is the first. That was the 31st. All right. So they were still buying going into the close on the day they were going to announce their earnings. BLKB, big left-right combo. Now, kind of a flutter kicker signal. Notice they opened it here and closed it here. Let me make this bigger, big enough so even I can see it. Notice what happened. They opened it here, closed it here. The next day, they gapped it up. When they gap up, and even if they do a doji, that's telling you there's been a major change of investor sentiment. Now you can see it's starting to move. Glue, we already did. Glue's got the setup for a bobble breakout. I thought after hours it was trading up here, but there's your J-hook pattern right there at the 50, giving you a high probability that you're going to have more upside. And there's your fry pan bottom set up on PVTL. Right now, all you can do is stay long as it stays above the T-line. Do you seem concerned about volume? Won't heavy volume buy signals and breakouts carry more weight and lightweight volume less weight? Yes. Not that we use the volume as a criteria. We use it as an additional fluffy confirmation that, let's say, for example, let me find something where there's a reversal. It may take a minute. Well, let's just say, for example, right here, as the fry pan bottom was starting, there was huge volume. Yeah, that's tell you that's telling you that there's been a change of ownership. Okay, so let's take a look at a few that somebody wanted to see if this was a wedge formation. It's not. But it is a, trying to see what color that candle. It is a bullish doji sandwich. So what's your analysis of this one? Well, you've got a strong signal. you've got a downtrend, you got to make sure it breaks that downtrend. Zoom out a bit on this one. This is the one we're looking at. You can't really identify. Okay. Let's see. PLAG. Whoops. This is fairly new. You can see there's kind of a wedge right here. And where is it supporting? Right here on the 50. And if this one starts moving from the 490 level back up to the $12 area, that's kind of good percentage return. Does what work in reverse? As far as a bearish wedge breakout? Yes. Oh, yes, there's a bearish J-hook patterns. Which ones were they? Bearish J-hook pattern on NVIDIA. And we know that wave 1 and wave 3 are usually going to be the same. I think I've got JD on here somewhere. Let me get to it so I don't get confused, which I easily do. Stay at this little wedge formation. Now your best friend breakout. Tells you there's probably going to be more upside. Oh, who wrote this? Terrible handwriting. Another little wedge type formation. And again, your best friend breakout on DNLI. Where's your first likely target? At least back up to the 50-day moving average. AXGN. I'm having a hard time seeing those wedges. This, to me, is more of a kicker signal. And that's more of a trend channel. Where are the waves on NVIDIA? They're not really sophisticated. You got wave 1, kind of back up to the T-line, wave 2, and wave 3. Wave 3 and wave 1 are usually the same. Okay. The gray line is, yes, the 34 exponential moving average. It's not anything major, but it sometimes works well. Okay, let's see. Which one is this one? RDHL. Kind of a wedge formation. You can see the tops, you can see the bottom, and it broke out. So these are all things that are going on right now. I don't know whether form was one. I don't know why I've got that one on here. Form and tree. Oh, this is the breakout. Oh, these were getting to the breakouts. So these are the different patterns we're going to be looking at. There's your Pantry Pride or Pilgrim's Pride. Big belt hold, bullish engulfing left-right combo. Strong implication there's going to be more upside. FTSI. Big belt hold, bullish engulfing. Strong implication there's going to be more upside. Now the fry pans are also always stuff you want to look at. Look at the fry pan bottom breakout on GGAL. You can see the slow curve. You couldn't trade this one way or the other if you wanted to. But now it gives you the prospect of a lot more upside. We did this one. There's the fry pan bottom with a doji sandwich taking you out to the upside on MDXG. Whoops. Kind of the fry pan bottoms here on PRQR. Anytime you see that little slow curve, tells you there's going to be a high probability breakout to the upside. A slow curve is kind of a derivative of a fry pan bottom, but it's usually already in an uptrend, and it's usually a little bit quicker. But the movement coming out of it is usually fairly strong. So you got a fry pan bottom on JP. So if this opened positive and traded above the 50, who do you think is watching this? Everybody and their brother is watching to see what happens at the 50. So if it even gapped up, you want to be buying this one because everybody's seeing that it's going through the 50. We know that it's coming out of a fry pan bottom. That becomes a very strong trade setup. Did I do this one? VKTX. And that's a little bit uglier slow curve or a fry pan. And ARWR. Another little fry pan breakout with a doji sandwich. So these are just kind of identifying visually things that are going to give you better prospects. There's a J-hook pattern setting up on Ren Gold. Look what's happened right here at the 200. Your little doji hammer gap up, J-hook pattern in progress. ABX, another gold stock, J-hook pattern in progress. So gold, let's see where gold is right now. It's backed off a little bit, but you can see how it came up pretty strong today. So if you're looking to buy a gold stock, the added advantage is you're looking to see if this opens positive. If we're going to think it's going to open positive, well, you can look at your gold chart in the morning. If they've come back up through here, yeah, that tells you they're still buying the gold. You probably want to be a buyer at that point. MNKD. If this opens positive, look at your slow curve fry pan bottom breaking out. Now, when it breaks out, everybody that's watching it is probably going to start piling in. You want to be in before they do. ARGX, notice what this was. There's your bobble breakout. Came up, failed, pulled back, came back up through the 50. That's your bobble breakout. That's the type of thing you want to be looking for. So if you knew this was a bobble breakout, you could be buying right here, buying calls right here, knowing that you were in the right direction at the right time. PayPal, you can see how this is setting up for a bobble breakout. Look at your Morningstar signal with the best friend gap up. If it comes back up through the 50, you now have a very high probability trade setup. Okay. So we're also going to be showing people the different patterns that work extremely well. This one's working out just nicely. Look at your flat handle on overstock. Now you've got a buy signal. Where's your first likely target? Up here at the 50. But is that a resistance level? Well, if you know what a scoop pattern is, this is your handle. If it breaks through the 50, you've got a strong slingshot effect. Oh, I don't know which ones. Yeah, we're going way too fast. Mankind, MNKD. And Yard. There's kind of your little scoop pattern. Notice where it closed, right here at the 50. So if it opens positive, what's it telling us? We've got a handle and a slingshot effect to the upside. Would you buy on positive trading tomorrow? recognizing the 50. If you're buying tomorrow, you're recognizing that it's probably going to move up here, but your probabilities become greater when it goes through. So if you're buying on positive trading tomorrow, you just watch to see what happens at that level. I know people in the chat room are trading the Echo. Again, big move. Now, here's one where this is why using candlestick charts become a huge advantage. Got a stock that went from 2 to 17.5 in 2 days. When was it time to sell? Well, if you saw it up here, go to your 10-minute chart, and when the 10-minute chart tells you that it's starting to sell, that's when you take your profits. So you're more apt to be taking profits up here versus down here someplace. The LOGM, little J-hook pattern, that one probably has more upside. I'm going to go through these real quick because we're getting late already. This is where you observe the obvious. Look at where your buy signals occurred, right smack dab off the 50. Broke this downtrend. A much higher probability that you're in the right trade at the right time. So how long do you hold this? Well, this might be wave 1. This might be wave 3. Or you hold it until you see a sell signal. WSC, morning star signal, right smack dab off the 200. Close above the T-line. Where do you think your next likely target's going to be? Up here at the 50. What's your entry? A lot of people say, well, how do you set your stop losses? What's the expectation of a morning star signal? An uptrend. If this opens positive tomorrow after kind of a doji spinning top, what do you think it's going to do? It's going to trade positive. If it trades positive, what type of candle formation do you think you'll have? Probably the same as this. So what's that become? There's your morning star signal followed by a doji sandwich, or your morning sandwich, which is your McMuffin, which has a high probability there's going to be more upside. So, looking for the signals. Look at GDS, morning star signal. Close up here. You can still be buying this one. So, Apple, if it's still trading down here, you're going to have to watch to see how they open. Now, first of all, it may not finish up down here. When we wake up, it might be trading up here. Why? Because you've got the people trading probably 200, 500, 1,000, 5,000 shares trading down here. Tomorrow, when you've got the people putting in a 100,000 share order, a 50,000 share order, they're going to tell you where they're buying. Oh, no, that's not really a wedge breakout. It's kind of a double bottom. Nothing real exciting on that one, Rob. Let's see. GLMD. There's kind of your morning star signal, except the difference between a morning star signal and a cradle pattern is that usually a morning star signal has 1 or 2 indecisive days. As soon as it goes to 3 or more, I call it a cradle pattern, but that's a very strong reversal. Tiva, there's your best friend breakout. More than likely, you're going to see more upside. Again, these are the results, the expected results. There's a big bullish engulfing on USCR. More than likely, more upside. VSTO, almost a kicker signal. A true kicker signal would open at or above that open. It probably implies there's going to be upside, but probably not with the same magnitude as if it had been a true kicker signal. There's kind of your morning or your cradle type pattern. Notice doji, 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 best friend. That implies you're probably going to have upside. XON, same scenario. Cradle pattern. High probability, because the probability is based upon when you see that flat trading area doing dojis, a lot of indecision. Need more money to follow these trades. No, Marshall. The nice thing about being able to scan very easily for the best signals and patterns is narrow it down to the 2 or 3 type of signals or patterns you want to trade. And then you've got the benefit of, out of those 2 or 3 different signals or patterns, you might have 5, 6, 7, 8 to look at. Now you can kind of cultivate them down to the best signals or patterns. So also, let's see, this was another belt hold type signal. So you can, you got people that, which ones do you trade? Eric, I trade all of them because I identify all of them. But if I was going to pick out 3 or 4, I'd be trading the best friend signal. I'd be trading the left-right combo. The left-right combo is a doji followed by a bullish engulfing. Now, I kind of consider that one signal pattern with a doji, bullish engulfing, or best friend. I'd trade the kicker signal. What else? And probably a fry pan bottom breakout. If I just traded those 4 different patterns, I'd have more trades than I'd ever be able to handle. Okay, we've kept everybody way over time. Any general questions on candlesticks? Should we be double checking these signals are breaking the downtrend channels on those that have been insignificant? You can. You can at least expect a bounce. Do you scan for these signals? Yes. Scanning with candlesticks is very simple. You know, once you put the scans in, the formulas are already at TradeStation, Thinkorswim, Metastock, Warden Brothers, Ninja Trader. I don't know whether they're at a bunch of them. And our formulas are on the website. All you have to do is copy and paste it. Do you agree futures until shortly before 9:30 don't seem to mean much unless they are significant? Yes. So if we wake up tomorrow and the pre-market futures are showing the Dow's going to open down 200 points, that's significant. If tonight the pre-market futures are showing it's going to open down 200 points, it doesn't mean anything until probably 30 minutes, 10 minutes before the market actually opens. Because that's where everybody's making their decisions. So, let's see, Bison was always a good one to trade. It made a lot of money. Yes, that's kind of your best friend signal. I say kind of because you have a doji or a hammer gap up, now a doji gap up. That's telling you when they start gapping it up, that's a lot of force coming into the trade. All right, everybody. Let's call it a night. Remember, November 17th, all you have to do is come in your pajamas and your slippers, not even your slippers, just with your cup of coffee or hot chocolate. We spend about 6 hours of identifying the best breakout patterns and then the setups for them, like what signals set up for them. So with that, everybody have a good evening. Finish up the Halloween candy and then get a good night's sleep. All right, everybody. Will that be recorded? Yes, that will be recorded. All right. Thank you for coming.